Hello everyone, Gabe Mateos with you. Today's presentation will be on deferred income annuities. This video is brought to you by Life Endeavors Marketing LLC. My name is Gabe Mateos. I am the owner of Life Endeavors Marketing LLC. And before we begin, I just want to let you know that this is the information that you're going to be receiving is not intended to be taken as financial or tax advice. This video is strictly for informational purposes only. Before you make any decision in investing in a deferred income annuity or taking any action on withdrawing funds or depositing funds into a deferred income annuity, reach out to a financial and or a tax advisor. So what exactly is a deferred income annuity? So a deferred income annuity is a pension type of product similar to Social Security where you pay premiums into this income annuity product with the really the goal of receiving a stream of income sometime in the future. Now, the difference between a deferred income annuity and a single premium income annuity is that with a single premium income annuity, you're starting payments, you take a lump sum, and you basically start receiving immediate or income type payments within at least a year. With a deferred income annuity, you're maybe waiting 2 to maybe 30 or 40 years. So it's a pension type of product really intended to really secure income payments way into the future. So I'm going to move my little icon there so you can actually see what is a deferred income annuity. Sometimes it's known as a DIA. Now, this type of product is also an element of transfer of risk. What does that mean? So with annuities generally, the annuities are really intended to ensure that you're not outliving your retirement resources in the future. With a deferred income annuity, you're basically transferring the risk of outliving your sources of income, retirement sources of income, way into the future, meaning that you can be assured that every time that you put money into a deferred income annuity, that your income payment in the future is going to be guaranteed. You don't have to worry about market fluctuations or losing your money. You're gonna get your money guaranteed in the form of an income stream whatever date in the future that you select within your contract. It's a fully transparent product. What this basically means is pretty straightforward. There's no complexity. There's not a lot of bells and whistles around this product. It's really intended to be, as I mentioned, a type of annuity, an income annuity where you put your money in and you're going to get that money back in a stream of income, whether it's monthly, quarterly, semi-annually, or annual sometime in the future. Now, let's talk about the why a deferred income annuity or DIAs. Why would someone decide that they want to take or purchase a deferred income annuity from an insurance carrier? One of them is the longevity risk. And by that I mean if someone has a history of a family that lives a long period of time, or that they're concerned that they're going to live a long period of time, again, they don't want to outlive their resources, a DIA may be the perfect plan for you because a DIA is going to make sure that you know the stream of income that you're going to get at some time in the future so you can budget accordingly, and you're guaranteed to not lose that money at any time, or in some instances for the rest of your life if you select a life income type of option, let's say. There's different income dates with a DIA that you don't have when it comes with other types of income annuity or even deferred annuity products. What I mean by that is sometimes deferred income annuities in the market, they allow you to exercise a rider, which is called basically an income payment rider a lot of times. And what this allows you to do is that if you have a set of an annuity starting date set for sometime in the future, but you need the money today, you can actually alter that income date to where you can actually receive a portion of your money today, get an income date going, and then you can receive the remaining part of your stream of income at some time in the future. So it allows you to have some flexibility when it comes to selecting the income payment start dates. There's also the element of inflation. I should have elaborated a little bit more on this when it comes to the slides, but what I mean to say there is that with deferred income annuities, you are in some instances allowed to purchase. Sometimes it's for an additional price, sometimes it's not, but you're actually allowed to purchase a cost of living adjustment rider. And what that basically means is that to keep up with increasing inflation, your payments can increase by 3 to 5% every year. Now, keep in mind, it's not going to be something that will keep up with inflation if the inflation market is at 20%, but at least you don't lose a lot, or let me see, you don't lose all of your money to the effects of inflation. At least you can keep up with inflation to some regards with the stream of income that you're receiving from your deferred income annuity. So let's talk about some of the pros and cons of a deferred income annuity. So as I mentioned before, some of the pros here is the custom payout options. You're allowed to have some flexibility when it comes to the payout dates that you select for tomorrow, or maybe 20, 30 years from now, for example. If you want to adjust that to maybe start receiving payment income streams today, you can adjust the income payment start date so that you are able to receive a portion of those payments today versus tomorrow. You can also have joint payments when it comes to spouses. So you can name multiple annuitants. I think I've talked about this in other videos where you have two spouses that are named as joint annuitants. The payments are based on the life of both spouses. In the instance where one of those spouses dies, the remaining payments go to the surviving spouse, bypassing any type of probate, and they receive 100% of the payments. No questions asked. There's no interruptions. So that's a benefit of having a deferred income annuity. There's also the element of savings of having a deferred income annuity in an IRA and or a non-IRA account. And I can get into the more specifics of what the benefits are of having it in both in a future video. But nonetheless, there's some flexibilities. If you want to have the ability to save in a Roth IRA, for example, and have that money go back to you tax deferred after certain requirements are met, you can certainly do that. You can put it in a non-IRA as well, meaning you don't have the restrictions of contribution limits with that. So there's options that you have, and at the end of the day, you're getting that money back in a stream of income sometime in the future, guaranteed. The cons, though, is that you don't have a lot of liquidity when it comes to deferred income annuity. What do I mean by that? Is that you don't have the ability to actually access cash or make withdrawals, one-time withdrawals from deferred income annuities, because basically a deferred income annuity is an income annuity. Think about it to where if you have an immediate annuity, you don't have access to cash. You just really have the stream of income that's going back to you, whether it's monthly, quarterly, semi-annual, or annual. You don't have that with the same element. You don't have that with a deferred income annuity. You don't have access to cash. There's no market growth potential. These are very safe, very safe products, meaning it's not tied to any kind of index or any kind of sub-accounts like a variable or fixed index annuities. So basically, you're going to be getting a stream of income, and you put your money in, you're going to get a stream of income on the way out, and that's about it. There's no cash value as well, so you really can't go in and surrender this type of contract, right? A lot of times, once you get into it, you're pretty much locked into it. So look at it like an income annuity. Once you put your money in, you're locked in, and you can't get out of it, right? So those are some of the pros and cons of ADIA. So with that being said, I do want to thank you for watching this video. I invite you to, if you have any questions or comments, send an email to support@gabrielmatheos.com. I look forward to getting your questions, your thoughts, your comments on DIAs or any other thoughts or questions you might have on income annuities or annuities in general. Thank you for watching, and I'll see you in the next video.